All right, ladies and gentlemen, welcome to another edition of Your Retirement with Insurance 365. As you look at your radio on your left, that's Angela Cradaville. Hello, Angela.
Hello, Jeffrey.
Welcome back for month number 3. And on your right is Jay Kenobi.
Hello, Jeffrey.
How are you?
I'm doing swell.
And the ugly guy right in the middle is yours truly, Jeffrey Stephan here. So we've been talking, you guys, a lot over these last couple of months about Medicare. It's time to make your selections for the next year. And Angela, I know you are busy. What'd you say, Jay? 13 appointments a day, maybe?
We limit her at 13. You cannot be number 14. That's where we draw the line.
And she maxes out. But, we're getting down to the last few weeks here. And like you say, Angela, a lot of the places people normally go to help them through this, they're all booked up, so they come to you. So
don't wait. December 7th is the final day, but definitely don't wait till the deadline.
One thing that we've learned, if you've listened to our programs here in previous months, if you want to just renew everything, that's okay, but you really need to see what your options are, because you've saved some people some pretty major money, haven't you?
Yeah, it's just definitely good to review to make sure you are getting your best bang for your buck.
Absolutely. Well, she can help you out with that. So you can call her at Insurance 365. It's right down there on South 13th. But Jay, this month, we want to talk a little bit about life insurance, and specifically mature life insurance. So let's dumb this down for hosts like me. So let's have you explain what mature life insurance is.
I would say mature life insurance is for those people probably 55, 60, and up until age 100. But it's kind of I would call the third chapter of life. The kids are getting out of the house, kids are getting married, and now you're looking at your spouse and tying everything together, looking at it economically and saying, what are we spending our money on? What does our retirement look like? Because we're 5 to 10 years away. And inevitably, that automatic draft that you look at from an insurance company, you say, what is this? And
yeah.
A lot of times it's a $100, $200, $300 life insurance policy that you haven't looked at. And now you're 55, 60 years old.
But those forms, they're so complicated. So the first thing you probably need to do is bring it down to Insurance 365 and let you guys at least peel it back and let folks know what it really means.
Yeah, we probably have 2 to 3 people a week bring in questions about their mature life insurance. And just like you said, I bought it from a buddy playing softball. I bought it from my uncle. I bought it from a college friend. And they've been paying these premiums for 20, 30 years, and they're not even sure. I'll always ask people, so what type of life insurance do you have? And it's a blank stare. and then I'm guessing, I'm like, well, how much do you pay? And they say, well, $50. What's the death benefit? And you're guessing, is it term? Is it universal? Yeah. Is it whole life? And all are good and all have their place. But it's scary when you're, been in a product for 20 to 30 years.
Right.
And you don't even know what it is.
Yeah. Well, we're going to get into that in more detail here in a little bit. Whole life, universal, term. There's ups and downs to all of them. But let's get back to mature life insurance. How do you know if you need it? Let's start there. Angela's going to take that one?
Yeah. First of all, do you have any debt owed? Do you have money you owe to other people that if you would pass away, you need to satisfy that? Mm-hmm. And then your second, do you want to create inheritance tax-free money for your beneficiaries?
I suppose, Jay, if we still owe on the house, and I don't want to leave the house payment back for my spouse.
I see that a lot where people will say, hey, I'm 62 years old and I still owe $30,000 or $50,000 on a house. And they say, you know what, I've lost some friends, and I just don't want to leave my spouse with that $50,000 balance.
Boy.
So yeah, that's just a big one. The obvious one is right there. Sometimes it's vehicles, sometimes it's miscellaneous debts. In business owners, sometimes it's just, hey, I have this business and I have a line of credit, and I have a real estate building that I run my business out of. A real popular one anymore that really goes into planning is when Angela said, creating inheritance tax-free.
Yeah.
We've all had that one kid. There's always one kid that needed a little more adult financial help.
Sure.
Than your other kids.
Right.
Jeffrey, you have a few of those, right?
I'm already starting to realize that really, really fast.
Yeah. There's one sticks out,
Some, some just cruise along, and then the others, it's like they get stuck in a few places here. Yeah. But you're right. You want to be equal to all of them, but sometimes one or two of them need help maybe a little sooner than you really wanted to give it to them.
Yeah. Some people borrow money to their kids to start a business. Some people even borrow it to them for a divorce. And then the other kids are like, well, dad gave this kid this much, and the same kid got this much, and a lot of help along the way. And then the parents go, you know what, you're right. I did help that one a lot more. So I would like to leave some inheritance to the other kids. And that's a good way of equality. Sometimes we see it with business, especially in farming. Maybe a son is coming back or a son-in-law is coming back.
Yeah.
And then what about those 2 or 3 other ones?
Like the daughters.
Yeah. And they say, hey, how come this is happening? And so life insurance, if you just sit down and talk about it, you have to remove yourself away. Life insurance is, I started selling life insurance when I was 19 years old, and it's a offensive subject. It can be offensive to people. And I have told hundreds of people, it's not for you. So let's just get above that. It's for people you love. Just stop thinking about you, because it's not about you.
Yeah.
Life insurance is not about you.
It's helping the people left behind.
Yeah, and it's a there's, I've had numerous times when I've spoke at the high schools and the colleges, and I tell people, it's the one product that I'm guaranteeing I'm going to come back. You're going to die. and it's also the product that I'm the most proud of at the time of a funeral or a wake.
Yeah.
I have a check in my pocket. Everybody else in that church has, ham and prayers, and those are all very important.
Especially scalp potatoes.
But life insurance is the one thing that I'm most proud of. When I deliver a check for $100,000 or $500,000 or $1 million,
right?
Imagine the impact and the gratitude that you receive for helping that mom or dad.
That's never fun, that whole situation. But for you, for somebody who does this for a living, to be able to go say, all right, remember this talk that we had 15 years ago? Mm-hmm. Here you go. And it can lift a lot of burden.
Oh, it's honestly, it's the best part of my job when there's a check with zeros at the end.
Yeah.
And it's on that. And remember, it's a tax-free thing. So inheritance, if planned correctly, life insurance can be part of a lot of people's plans. Some people leave it. Angela, you had a lady with how many grandkids?
She had 8, and she wanted to leave $10,000 a piece to each of them. So what's the best way of doing it? Tax-free to them. It'd be life insurance.
Mm-hmm.
Life insurance. She made a small premium payment every year. That way she can gift them the $10,000 a piece.
Wow, man. That's a wonderful grandma. I want to dig a little deeper, Jay, on something else that you were talking about as far as the farm. I want to get into the weeds with that a little bit here too, because that's a hot subject. Moving that wealth from one generation to the next and making that generational switch over. It's difficult for farmers to do that. But how do you do that in a fair and equitable manner? Let's say you do have 5 kids. You have 2 boys and you get 3 girls. The girls aren't really interested in working on the farm. They had enough of that growing up. It's like, I want to marry a doctor and move off somewhere else. But the boys...
A rich radio guy.
Yeah, rich radio guy. Yeah. But the boys want to stay and they want to work. They want to work the farm. How do you make that work out to where the boys don't get everything and yet the girls get something out of the deal?
Well, I use the word leverage. If you have tax-free life insurance, you can leverage a lot of things. Let's look at it from the boys' perspective. Let's say the life policy is even bought by the boys on dad, and the money comes back to the boys. Now the boys have the leverage because they have cash in hand to buy out the sisters at a very fair. The sisters don't feel bad about it because the boys have the money, the boys receive tax-free money, and they basically prepaid on the land. So now in that situation, everybody's pretty happy because if they need to borrow money from the bank because maybe they didn't buy enough life insurance, look at, again, the leverage. So if a farmer comes in and says to his banker or his loan officer, he says, well, I have $300,000 from a life policy. I'm trying to buy my sisters out for $2 million, but I have $300,000 down.
It's a good start.
That's a heck of a start.
Darn right it is.
That is a really good start. And then you also take the other side. Let's say mom and dad left the life insurance proceeds instead to the girls. Well, now all of a sudden the girls, Thanksgiving is not salty turkey anymore. It's they still get along with their brothers.
Yeah.
Because yes, the brother may have been given a house. Maybe the brother was given land, but this sister over here got 300 or 400 or 500,000. So she's like, I'm still going to get along. It's when you have money at the table, it just makes things
a little easier. Yeah, it is, and it really is a tough situation, and everybody thinks, well, when it comes, we'll all work it out, and
they don't.
and it doesn't. It never works out.
I always say it works with the kids. It doesn't work with the in-laws. If you set your 3 kids down, it'd probably be okay. But you sit down 3 plus 3, and you've got in-law.
That's even tougher too. Yeah, when the son-in-law wants to come back and farm too, and so just a good discussion long before that ever happens is probably worth your time. This is Your Retirement with Insurance 365. Angela Cradaville is with us, and Jay Kenobi. When we come back here in the second half of the show, we're going to still talk about mature life insurance, but we're going to talk about various types of life insurance: whole life, universal, term. The goods and the bads of both. So hang on, we're coming back on Your Retirement Insurance 365 on News Talk WJAG. News Talk WJAG. Back with Your Retirement with Insurance 365. Jay Kenobi and Angela Cradaville, our guests. Let's talk about getting that annual insurance statement that you get in the mail every year, and you look at it and you go, I'm not even sure if the guy who sold me this is still alive, right, Jay?
Oh, we get that one a lot.
Funny, but we do
get
that, right?
We get that a lot. And 9 out of 10 people that get in the life insurance business don't make it. Now think about it. 9 out of 10 don't make it.
Yeah.
So the chance that your guy or gal is still in it is 10%.
I think this underscores really the need or the necessity or maybe the peace of mind that you get if you do business with people who have been doing this for a while and established businesses like Insurance 365.
Absolutely. And knowing your product, and really, here's something that we need to hit on. Knowing your beneficiary. I mean, I had a lady last year that husband died early in his 50s and had the wrong beneficiary. And to this day...
It wasn't the previous wife, was it?
No. I have had that conversation. Yes. And I'm proud to say these have not been my customers, but people that come to me and say, what can I do? When you die, your beneficiary is your beneficiary.
Yeah.
And those are things that just, I never understand how in a world of real certainty, you're going to die.
Mm-hmm.
Why you would not once a year take that statement, sit down with somebody and just go over it. There's nothing more to buy. People fear, I'm going to go talk to Jay and he's going to propose
He's going to upsell me.
No, let's just review it and have the discussion so you know what you have and have the beneficiaries correct and have the funding correct.
Right. There are insurance policies that create cash value, and at some point you will get to a cash value where it will be high enough that it actually covers your premium. So why wouldn't you do that? But you still find people who are still paying in on a policy and they don't need to be.
Yes. So many people have a high cash value side. They'll have $100,000 in their cash value side and a death benefit of $150,000.
Mm-hmm.
And I just ask them, do you think when you die, do you think you get $250 or $150?
Yeah.
And they say, well, I get $150. And I say, well, then the company kept $100. Ouch.
Yeah.
And I've had people with illness, like terminal illness. I'm like, stop paying. Let's get this straight. Let's call the company together, and let's find out if this policy will pay for itself. It's a very common, agents a lot of times have sold these on cash value, and cash value is good. There's nothing wrong with saving money. I'd never say there's anything wrong with saving money.
Right.
But understanding as you mature and change how to leverage that or change that to make it an advantage for you. Maybe you can reduce your premium in half, because the cash value can pick up the other half of the premium.
Right.
Those type of things, very common. We see that a lot with whole life policies.
I think a lot of people don't even understand that, Jay.
No. They don't even. It's. That's why we're here. It just.
You hear cash value, building cash value, we think that's a good thing. Yeah, I'm going to sign up for that.
Yeah.
But
and you have to remember, agents work on commission.
Mm-hmm.
Okay, so the higher the monthly contribution,
right,
the higher the commission.
Mm-hmm.
And the problem people don't understand out there is agents by companies get paid very heavy the first year, not so much thereafter.
Yeah.
And that's why the Omaha agent from out of town comes in and sells you that policy. And I was in a house just last week. 1995. And they said, we haven't seen an agent since.
Mm-hmm.
And I look, and the business card's out of a big town about 120 miles from here. And I'm like, did you expect him to come back?
Yeah. Yeah.
And you know, you just see things like that. You see high premiums in the first year. That's another trick. Pay high premium. If that agent got 40% of a high premium.
Yeah, that's why he wanted you to do that.
Yeah, and then every year after it was like a third of that. You know, so you have to bring these statements in and just say just go through them and tell me what I did right, what I did wrong. Sometimes 40% of the time I sit down with people and say there's nothing to do, and they like that. They walk out and go, whew.
Yeah.
Okay, someone objectively looked at this and said, pat on the back, good job, and away you go. That makes you feel good. It's not like everybody comes into me and I say, this is wrong and that's wrong. That's not true.
No.
But about 40% of the time I say, you know what, you're in good shape.
Let's walk through various types of insurance. Angela, you want to take this? Let's start with whole life. What do we need to know about whole life?
I'll take the whole life one.
Okay.
What you need to understand about the whole life is what is your objective in the savings side. Obviously, it's a product that does not give you as much death benefit per dollar. Mm-hmm. So you need to really be aware that that's a product I'm purchasing because I wanted the cash value. Typically, what I see is people without traditional IRAs, Roth IRAs, mutual funds, financial planning. Those are typical your whole life type buyers.
Yep. Okay. All right. Universal life.
Yeah, I'll take that one. So universal life it's a term policy that is a permanent policy. So it'll run for the rest of your life. But what people need to understand when you buy that, that doesn't mean that's what your rate is for the rest of your life. You need to read your annual statements, because inside a universal life is a built-in term policy that the premium does go up every year for the cost of your insurance. And so the cash value in your policy, so you make your premium, and then if you are not making enough of a premium for your cost of insurance, it's taking from the cash value inside of your policy.
Oh, okay. All right.
So sometimes we see policies where insureds are making a lesser payment and it's draining the policy. So your policy can run dry, meaning it's going to lapse. You need to start putting more money into the policy.
Yikes.
So that's where we come in and help.
Again, a great idea to just take a look at it and really understand what you bought in the first place, you know?
Yep.
Well, I like the guy, and he was really good, and I know he wasn't going to mislead me, and you know how that all works here. But, okay, and then term insurance.
Term insurance, the big challenge is to stay on top of it when it's going to go away. A lot of times I see this between like 64 and 74. You know, and I look at the contract, I say, okay, do you understand, Jeffrey? This runs out at 71.
Yeah.
And you might be 63 and say, okay, I have 8 years left.
Mm-hmm.
Yes. So do you want to just ride this out in 8 years and then your life insurance is gone? And can you and your wife live without life insurance? And you might say, yeah, I think we can. We're going to have the house paid for in 8 years. Our 401ks are going to be good. We're working on that. So Jay, I'm okay. Let's just keep it in place. Some people say, well, I always planned on leaving my wife at least $100,000.
Okay.
Well, then we have to say, okay, was that a convertible policy? Because maybe now you're diabetic. Maybe now you have a DUI on your record. Maybe now you've been seeing a shrink for mental issues. Maybe you have cholesterol. Maybe you have a family history. So we have to say, you know, you're in a term policy. Do we need to go out here and look at a permanent policy because that's what you want? That might be yes. And in addition, are you insurable? That's a big thing. Are you insurable? Because now you're 63. And so term life insurance, you have to sit down and really just work with someone like Angela and I and just get the facts of, do I need it when this term is over, or should I do something now? And there's so many other things that we haven't even touched on, like annual renewable term, return of premium term, variable life. There's just so many out there. And when and you said it best, you know, the guy showed up and he was really nice.
Yeah.
And he coached my kid in soccer too. You know, okay. But that was 20 years ago when he was coaching your kid in soccer. And now, and there's no bad companies, there's no bad products. What's lacking in life insurance is an understanding. These products all can work.
They all do. Well,
the Department of Insurance wouldn't allow people to sell them and distribute them.
Yeah.
But for people not to know how their life insurance works, when you're 100% going to use it, that's crazy. I mean, some people say, "Oh, I don't understand car insurance." Okay, well, don't have an accident, and some people never do.
Yeah. Good luck with that.
But everybody's going to pass. So.
Before we run out of time, I want to talk about burial, final expenses. That's something we haven't talked about yet.
Yeah, the truth of this is you see a lot of advertisements, you see a lot of promotions, and it's a lot of different people saying, okay, come in and get this for $8. I can't stress enough. For one, it's typically not a policy that is true life insurance. A lot of times it's accidental, something like that. The other thing is they're giving you the best rating. So what that means is you have to actually ask yourself, let's say you're 80 years old, 70 years old, 60 years old. Have you never smoked? Never drank? Still weigh under 120 pounds? No medications? You exercise daily?
Yeah.
You grow an organic garden?
None of the above.
And you have a full year supply of your organic garden in your cellar and deep freeze? I mean, okay, now you're preferred. Now you get the rate that's on TV.
Yeah.
That's $8.
Wow.
It's just time and time I've had these conversations, and they're like, well, I'm a little heavy, and, I could do a little better here. And I'm like, okay, then you're this category. Someone needs to tell you the truth.
Right.
That's just a quote on TV. They're gonna try to lure you in.
It's
with
in
this
the
fancy
fine print. If you ever see those commercials on TV, look at the really fine print at the bottom of the screen that you couldn't read with your bifocals on right up next to the screen anyway, but it's there.
It's there. And a final expense policy, some people call it a funeral trust, a final expense, a burial policy. Jeffrey, what's that for? What's that? Typically what Angela and I hear is, hey, I just don't want to leave the kids with this $10,000 bill. I know I have it in my CDs. I know I have it in my savings account, but I want to know it's taken care of. I took care of it. So a policy like that, it might be $40, $50 a month. Mm-hmm. You pay it.
Yeah.
And when it happens, the money goes to the child. The child has $10,000 and there's no bill.
Yeah.
And that's very common, I think, more in the widow situation.
Yeah.
I see more widows come in and say, we went through this with my spouse. This was not fun. I don't want my kids to even blink on this.
Yeah.
I want them to come to you. You write a check. Let's be done, over with.
And that is all the time we have on the program today. It's Your Retirement with Insurance 365. It's every third Saturday morning here on News Talk WJG at about 7:35. Contact Jay Kenobi or Angela Cradaville today, insuranceagency365.com, or see them here in Norfolk on South 13th Street in Norfolk. All right. Thanks, guys. Talk to you again next month.
Thank you.
Thanks.